Hello traders! Today I'm going to show you how to spot a major reversal using Bookmap. We were trading the RTY on Friday. It was tanking all morning long and we caught the very bottom for a huge move. Now, to show you what I'm talking about, I'm going to pull up the chart here. Okay, so around 8:45 Central, the sell-off happened. And it was a very, very sharp sell-off. So we go from basically 22.30 all the way down to almost 21.60. Now that is a lot of points, all right? And what we ended up doing was catching it, I think about right here at 9:35-ish, and we caught it for a 20-point ride to about here, maybe right here, and then it kept going on for the morning. But a 20-point rocket shot, I'll take that any day of the week. You know, you can never expect to catch all of every single move. So let's get right into it. All right, so right here, you're going to see a couple things that maybe you have not seen before. Now, you're going to see all these boxes popping up here, these executed boxes, these cancel boxes. Now, this is a beta testing program that I'm available to use from Bookmap. It's for their iceberg and stop indicators. Right now, they're only putting stuff on the chart for the iceberg, but basically, if you've seen any of my past videos, you were seeing like the little just lines down here trying to indicate where an iceberg happened. Now they're putting it directly on the chart. Now we still have these down here. I've just removed them for this visual just to make it easier, so you can just see everything popping up on the chart itself. Okay, so that's what these are. They're executing as saying, hey, an iceberg executed here. And then there's some various other symbols, but don't get too caught up in the symbols for now. It is just a beta test. Symbols will change in the future. Just know that these are icebergs firing off. These are hidden orders that you would not be able to see unless you have Bookmap. Okay, that's very, very important. All right, so you can't see the big tank here coming all the way down. Basically, it's come down already. We're almost at that 21.60 level. And if you look right here, you'll see this solid band right here of liquidity. Basically, these are traders that have been waiting in the book for quite some time to make their play. Now, this does not happen very often in the RTY. It happens a lot, pretty much all day long in the ES or the NQ, things like that. You'll see these solid bands of liquidity, somebody that's been waiting to trade for a long time. And sometimes they're significant, sometimes they're not. Now in the RTY, they're so rare that usually they mean something, all right? Now they could break or they could bounce and reject price. So, you know, I'm not telling you you're going to be able to guess with 100% certainty what's going to happen, but usually it means at least something is going to happen, meaning it's a good place to take a shot, all right, to play those probabilities to try to get your risk reward. So we're going to play this out. And I'm going to try to kind of talk it out. Right here is the CVD, this line. This is the cumulative volume delta. This is going to come into play as well. This is just keeping track of buys minus sells, letting you know kind of who's winning. You know, if there's more selling going on, then it's going down. If there's more aggressive, I guess the right term is aggressive, because if for every buy there is a sell. Basically, the executed market orders for every you know, if the sellers are in the lead, the aggressive sellers, then it's going down. If the aggressive buyers in the lead, it's going up. All right. And so basically that matches up with these bubbles up here. That's what these are. A big red bubble doesn't mean there was only sellers there. It just means there was more aggressive sellers in that spot than aggressive buyers. Aggressive buyers is blue. So let's play this. And let's hit resume. And so as we're coming down, there was something that I was watching for. We had been going all day long. So basically you have to be careful. And what I say is try not to step in front of a freight train or you're going to get run over. All right. So you have to be very careful about making a play like this. You want sort of a tight stop. You want to be protected with something like this, and you want to get out early if you're wrong so you don't lose too much. But the flip side of it is if you're right, you could catch something like I did, a 20-point move that actually could have been 40 to 60 whole points. And we're not talking ticks. All right. We're not talking ticks. There's 10 ticks in every point on the RTY. All right. That's 200 ticks. Okay. So we're coming down And you've got some icebergs firing here. So I'm thinking, the big players might still be getting a little aggressive, although there was a number of buy icebergs that went off through here as well. And, you've get this big red bubble here, but you're seeing all this, I call this fire, basically. And it's just a bunch of aggressive people jumping into the order book, waiting for their orders to get filled. Okay, that's what these highlighted areas mean. This means there's a lot more people in that part of the book than there are in the black areas. As you'll see, the CVD is still going down, so there's still more aggressive sellers than buyers. And we'll speed this up just a little bit. So there you go. You get another iceberg. It's dropping down. I'm thinking maybe they're going to try to take out this level, and then we're just going to keep going. We could just keep going down. But then you'll notice what happens right here. You had a number of, see that? Now, if we zoom in, like back here, there's one line, right? There's one iceberg that fired off here. Now, right here, you've got all these lines. There's a bunch of trades taking place, and it's getting absorbed by buyers every time. So I'm thinking something's going on here, all right? The CVD is also starting to shoot up, saying, hey, the aggressive buyers are stepping in now. Now, that doesn't mean, of course, that you just pull a long right away and that you're going to win. But, I'm taking notice right now. I'm really taking notice of what's happening. You get more of the buyer bubbles coming in. You get even more of the sell iceberg. So there's a big, big battle going on here, but the CVD just keeps going up. So I'm thinking that the buyers are actually absorbing all those icebergs, all those institutional sellers, and they just absorbed them and say, hey, we're going to make a stand right here at this line of liquidity. Now, one thing that's unfortunate is over here to the side, I usually have what's called spot gamma levels, and the spot gamma levels are areas where there's high levels of options interest. And why that's important is basically the idea is that the institutions have to hedge against those option levels. All right. So if things get too out of whack, then we're expecting that's the area where they're going to start hedging their bets, piling into futures to make up for what they need to do. That's the really dumb way to say it. So what you'll notice here, this is more important, but basically the spot gamma level matches up exactly with this line of liquidity. Okay. And so that gave me an indication too that, okay, so the spot gamma level is a level of institutional interest and we've got a high level of liquidity there. I'm thinking that maybe that level of interest is legit and we're getting icebergs firing off everywhere. So all these things together are telling me that yes, this is definitely an area of interest for big players, which means the market's going to move and that's what we're going to take advantage of. And so after you had all these sellers take their shot and then get absorbed by these buyers, now what happens is it flips. All of a sudden, you had sell. And now you've got buy icebergs coming in after it absorbed all these sellers. That's when I thought, I'm going to go long here. I'm taking my shot because this could be big. We'll speed this up a little bit more. I don't know if it's going to show you where I took the trades here or not. I don't know if it recorded that part of the file. So we'll see if I jump in here. So we get another buy iceberg coming in. We get more buy icebergs coming in. Another buy iceberg. Now price is starting to move. More buy icebergs backing it up. And if you're long, you're feeling pretty good. You're being backed up by the institutional players at this point, okay? Sometimes they're wrong, but I would rather be on their side than against them. And there it goes. Unfortunately, it doesn't look like it recorded my actual executed trades, but I also took a screenshot of this and put it in the posts section of YouTube. So if you look at my post, I've got markups of explaining why I did what I did. It's got the spot gamma levels on it. I show exactly where I took the trades and exactly where I exited. So if you look in the post section of my channel, I think they call it community. And then this is basically all she wrote at this point. So I'm going to speed this up, but you got more buy icebergs coming in. There's no sell icebergs at this point. None. You've even got what this is an active buy iceberg, means this guy right here didn't fill all of what he wanted to do, and he's still got his iceberg active supporting this level, meaning if the price comes back down, he still wants to get in at that level. The price might not come back down to him, and in this case, it didn't. I'm speeding this up to about as fast as I can. But long story short, it just keeps going. Now, on this chart, that doesn't look like that big of a move here, but that was from 2170 up to 2190. That's 20 full points. That's 200 ticks right there. Okay, I've got this kind of condensed down. So yeah, this is where I got out, was here, because I got those 20 full points. It was a nice trade. That makes up for a lot of bad trades. It makes up for a lot of bad trades. And, you know, I always get asked, like, why would you look at this? This looks crazy. And if you've never seen Bookmap, it looks crazy. But my question is, my question is why would you look at this? What does this tell you? You get this rocket ship down, and then at V reversal. I mean, what here gave you, maybe on a longer time frame there's something? Okay. So here and here and here. So yeah, that could have been a level that you shot for, and that's great. So bar charts have their use indeed, but if you're on a bar chart, why wouldn't you want to know that that's the level you're looking at, and then all the buy icebergs are coming and supporting you? You had all the liquidity sitting there supporting you. You had the spot gamma level supporting you. You know, one of the frustrations that people always say is, well, you know, this is an obvious support or resistance level, but why did it break through and take me out and then go the other way? Or why did it fail here? You know, there was 3 times it didn't fail, and now the time that I get in, it fails. You didn't have this. You didn't have all this. You didn't say that, look, all these sellers took their shot, didn't move the market at all, and then it switches to buying. It can be extremely helpful. You know, I'm not poo-pooing bar charts. They're extremely useful, but this is information that 99% of traders don't have. Go get it.